Beachhead Capital Management presents Smart Money Insights. Why China Matters. What is the smart money worried about today? A slowdown in China and the global repercussions. China is coming off 20 years of truly exceptional growth. While developed markets grew between 1.5% and 2.6% per annum, and many emerging markets grew at 3 to 4%, China's GDP growth was almost 10% per annum. Today, China is the world's second largest economy, over one-half the size of the US, and more than double that of Japan or Germany. From 1998 to 2007, GDP growth continued to accelerate on the back of a massive capital investment program. But since the financial crisis, GDP growth has slowed to around 7% recently, and many private economists believe that growth in 2015 will be well below this. So what's the impact? First, slower global growth. China's share of global GDP has been increasing, and by some measures has contributed up to half of global GDP growth post-crisis. Second, a collapse in commodity prices. China represents a large percentage of global commodity demand, including over 50% for aluminum, 40 to 50% for nickel, copper, zinc, tin, steel, and lead, and 30 to 40% for cotton, rice, and soybean oil. As a result, many of these commodities have experienced massive losses since 2011. A third risk is contagion to major trading partners, especially those that export commodities, including Indonesia, Brazil, South Africa, Russia, and Australia. Fourth, potential currency wars. As the US dollar has risen, the currencies of commodity exporters have declined relative to the renminbi, which is pegged to the US dollar. Fifth, a potential debt crisis. Since the 1970s, China's corporate and household debt has increased significantly to fund the massive capital investment program. And finally, equity market instability. The Chinese stock market traded within a relatively narrow range from 2012 through most of 2014. A change in policy caused the market to spike over 130% in a year. However, the bubble soon burst, and equities are now 40% below the peak. The key question for investors is, can China transition from an economy driven by capital expenditures to one based on consumer demand without experiencing a hard landing? Thank you for taking the time to watch this video. For additional information, or how smart money insights can help investors to meet their long-term investment goals, please contact us at inquiries@beachheadcapital.com.